Welcome to my YouTube trading channel, where I share valuable insights and strategies to help you navigate the markets and make profitable trades. Today, I'm excited to introduce a trading strategy that combines two popular technical indicators, the 200 EMA and cRSI. These indicators are widely used by traders to identify trends, momentum, and potential buy-sell opportunities. By mastering this strategy, you can potentially increase your chances of making successful trades and achieve your financial goals. So, whether you're a seasoned trader or just getting started, I invite you to join me as we explore the power of the 200 EMA and cRSI trading strategy. Let's get started. The 200 EMA exponential moving average is a popular technical analysis tool used to identify trends in the market. It's calculated by taking the average price of an asset over the last 200 periods, such as days or hours, with more weight given to recent prices. Traders often use the 200 EMA to determine the overall direction of a trend and to make buy-sell decisions based on whether the price is above or below the average. The cRSI Commodity Relative Strength Index is a momentum oscillator that measures the strength of a security's price action relative to another security, typically a market index like the S&P 500. The cRSI is calculated by dividing the price of the security by the price of the index and then applying the traditional RSI formula. Traders use the cRSI to identify overbought and oversold conditions and to make buy-sell decisions based on whether the cRSI is above or below certain threshold level. Great! Now let's move on to setting up our indicators and applying our trading strategy. First, let's open up our chart and add the 200 EMA to it. To do this, we'll need to select the EMA indicator from the list of available indicators, and then input the value of 200 in the settings. Once we've added the 200 EMA to our chart, we can start looking for trends and potential trade opportunities. Next, let's add the cRSI indicator to our chart. This can also be found in the list of available indicators, and we'll need to adjust the settings to match our trading strategy. We'll want to set the period to match the time frame we're trading on, and we'll also need to adjust the oversold and overbought levels with our indicators set up and ready to go. We can start applying our trading strategy. Remember, we're looking for instances where the price is above the 200 EMA and the cRSI is giving us a signal in either the oversold or overbought zone. When we see these conditions, we can take action and enter a trade. So, let's get started and see how this strategy works in real-world trading scenarios. By following these simple steps and using our indicators effectively, we can potentially increase our chances of making profitable trades. Let's do this. Right here, we can see a divergence between the cRSI indicator in the oversold zone and the price action. This could be a clue that the downtrend may be reversing soon, but we'll need to wait for the price to cross above the 200 EMA and for the cRSI indicator to confirm this crossover before taking any action. And here we have a large green candlestick that closed above the moving average line, with the cRSI indicator also rising towards the overbought zone and even surpassing the blue upper band. This suggests that buyers have created significant upward pressure in the market, making it a favorable view for a long position. As always, our first target is the 1-to-1 profit level. Once we reach this level, we'll move our stop loss to the entry point of the trade. The stop loss level should be below the lowest point where the divergence ended. That was a perfect trading setup. Now let's take a look at an example of a short position. Our trading rules are basically the same, but we just reverse everything. We're looking for a divergence above the EMA line, followed by the price closing below the EMA line and the cRSI indicator confirming this crossover. Yes, as you can see, all the conditions have been met. We can take a short position from this level. The stop loss level should be above the candlestick where the divergence ended. Unfortunately, we couldn't hit the target in this trade, though we managed to pocket some partial profit at the 1-to-1 level. Please never compromise on trading discipline. This way, you won't lose your capital. I believe you have easily understood the trading rules. If you have any questions, please write them in the comment section, and I will be happy to help. By the way, don't forget to subscribe, hit the like button, and turn on the notification bell. I would be very happy if you share my channel on your social networks like Facebook and Twitter. Thank you in advance. Let's take a look at another short position example to reinforce the strategy. Dear friends, in the next video, I will share with you another strategy that I'm confident will be very profitable for you. I'm just finishing up the final backtests. See you again soon. Goodbye for now.